get to read that chart on our website as well. But moving on, Hexaware has reported a big beat on revenues and margins. The company says this quarter is likely to have been the bottom and they expect a flat to small volume growth in Q3 and Q4. In fact, the IT space is definitely the flavor of the season. So let's get the management on board now. Shrikrishna, the CEO of Hexaware Technologies, joins us to talk about that. Shrikrishna, thanks for being with us on the show. It was a good set of numbers for the company. So just tell us about the growth outlook. What was the reason for the muted growth outlook? Because you said you expect only a small volume growth in Q3 and Q4. You have good deal wins. You're looking at a V-shaped recovery. Then why such a muted growth outlook?
See, there is still plenty of uncertainty, right? Okay. So I think anyone that says that, the COVID has been beaten, especially in the US, and hence the economy is on a firm path, irreversible path to growth. I don't think they know what they're talking about. I was hearing your previous interview that numbers are better in some areas. Actually, in the US, July numbers on many macroeconomic fronts are worse than June numbers. Restaurant bookings are down. Traffic is actually down. Airlines have cut back the planned number of increased flights they were planning for July. So there is still plenty of uncertainty. There are parts of the US, especially the southern belt, where the number of cases are going up quite significantly. So I think there is a bit of caution, and I think it's a fair caution. What I know for sure is this: we will do as well or better than anyone else. That's what we did in Q1. I'm sure we will do that the rest of the year. If the economy does indeed not have a blip and it has a great recovery, we will do better than everyone else. Okay. Because I can see that in every client. We are winning deals, we are winning market share.
Okay.
But Shrikrishna,
I was just wanting to know whether you gave that muted growth because you're seeing pricing pressures.
No, I mean, we had some pricing issues this quarter as well. But, the fact is that there are puts and takes, and ultimately we smartly expanded profitability. And I think every service provider in the industry is working with clients to some extent or other to give them concessions, and we are no different. So no, it's not a pricing pressure. It's just abundant caution on the state of recovery, which I think is far from certain at this point.
Okay, I want to understand a little more on what's happening with deal wins, because you did indicate that clients have reduced their new discretionary spends, and all the new deal wins are essentially market share gains from other vendors. So I'm just trying to understand what is the quantum of the cut that you've seen in discretionary spend so far, and will this deal momentum that you've seen in this quarter, is it something that would sustain?
So, let me answer the second question first. There it's an easy answer. The answer is yes. We see deal momentum continuing. We see both in existing clients and new clients, we will continue to win a fair number of deals. We've also established in this quarter, not only can we win, but we can also move customers and transition them safely. We've developed and demonstrated a methodology called touchless transition, and that's worked for scores of clients this quarter. Now, in terms of how much is the reduction in discretionary spend, I think that's a little bit kind of harder to put your finger on. Okay. I don't think it's quite settled, right? So on day one, you saw this little knee-jerk reaction of people cutting spend across the board. And I think they are in a phase now where they are reevaluating where to cut, how much to cut. They need the savings, so they're looking at other areas to save from, which is how can I bring in more automation, more offshore, bring in consolidation of vendors, how can I do all of those to save money, but actually then spend more money on important discretionary work. So I think we are still in that rebalancing phase. I think discretionary spend outlook will actually improve through the quarter. And there will actually be more pressure on the more traditional services.
Okay, well, I wanted to know about the supply disruption, which you said led to that loss of 1.3 million. Is that resolved?
Well, it's improved, but not gone away completely. Our operating philosophy has been number one priority is ensure safety of our employees. Number two priority is ensure that we can deliver stellar services to clients. Now, what that philosophy means when you translate that to real terms is that we've already told our employees, don't come back to office till end of the year, at the minimum. And this is not contingent on government policies.
Yes,
I think it's safest for our employees
So
to
short
stay
point, you can lose even this quarter, you think, because of supplies? Because of supply
We've
problems?
improved. We've improved on supply side, but it's not going to go to zero.
Okay, Shrikrishna, we have actually run out of time, but it was a pleasure speaking with you to understand what's happening on the ground as far as the technology space is concerned. Well, that's the word coming in from Hexaware. There's some uncertainty definitely, but the deal momentum could continue. Let's take a quick break on that note. Lots more coming up on the other side. Some fresh technical trades up for you next, and also a buzz, a check actually on the commodity space. Stay with us.